Good morning. My name is Jill Wood, and I am with Missouri Ag and Small Business Development Authority. I was going to reference it, but I'm looking to see.
Just so you know, this is our Senate Appropriations Director, Adam Koningsfeld, idea to go out of order. So I'm just going off his sheet. Maybe 71.
Yep. Okay, so page 71, the authority may provide this tax credit to any individual or entity who contributes cash to the authority. The contributions then used for financial and technical assistance in the form of value-added grants or rural agricultural business concepts. On page 73, we have the Family Farm Breeding Livestock Tax Credit Program. This program provides Missouri tax credits to lenders in lieu of the first year's interest being paid on breeding livestock loans made to small farmers.
Senator Searpoy.
Is there a way to tell if they're refundable or not?
So it'll say on here, I'm looking for where it is. There's carry forward, carry back.
Okay, I see refundable. Okay, thank you. It says that on all these sheets. Okay, thank you.
So going on to page 75, we have the Meat Processing Facility Investment Tax Credit. And the purpose of this program is to stimulate investment in the meat processing industry in Missouri and to enable livestock industry to capture more value in the form of further processed meats. Page 77, we have New Generation Cooperative Incentive Tax Program. And the purpose of this tax credit is to induce private investment into new generation cooperatives, which will process Missouri agricultural commodities into value-added goods. Page 79, we have the qualified beef tax credit. This tax credit is no longer, it was not extended, so this is just sitting there until all the carry forward is over. Next, we have on page 81, we have the Specialty Ag Crops Loan Program, and this program provides Missouri tax credits to lenders in lieu of the first year's interest being paid on specialty crop loans. And then on page 83, we have the Urban Farm Investment Tax Credit, and this is a tax credit that's issued to an urban farm or contributor to an urban farm based on eligible expenses incurred at the establishment for improvements on the farm, and the taxpayer can claim a tax credit in an amount equal to 50% of the eligible expenses or a donation to the urban farm. That's it. Any questions?
Any questions from the Committee for Ag? Does not appear so. Thanks.
Thank you.
How about Commerce and Industry? Insurance. Next. Adam's got to work on his penmanship. And that should start on page 1, am I right?
Yes.
Good morning, Mr. Chair and the members of the committee. I'm Brenda Horstman. I'm the Acting Director for the Division of Administration for the Department of Commerce and Insurance. We have 4 tax credits to walk through, and I'm happy to answer any questions that you have. So the first one is the Missouri Examination Fee and Other Fee Tax Credit. Insurance companies are allowed a tax credit for the costs of insurance examinations conducted by the department. Insurance are also allowed a tax credit for any Missouri income taxes, franchise taxes, personal property taxes, valuation fees, or registration fees incurred. Only the examination fee can be carried forward up to 5 years, and the carry forward is taken against the general revenue portion of the premium tax only. The next one is on page 3, and it is the Life and Health Insurance Guarantee Association tax credit. States created guarantee associations to protect policyholders in the event of insolvency of an insurer operating in the state. Insurers issuing life or health insurance in Missouri are members of the Life and Health Insurance Guarantee Association. The association assists members to pay claims of any insolvent insurers. And the insurance companies can then take these assessments against as a tax credit against premium tax. Credits are carried over 5 years, with 20% being taken each year, beginning the year after the assessment, and there is no carry forward on that one. The next one is on page 7. It is the Missouri Health Insurance Pool Assessment Credit. The Missouri Health Insurance Pool provided health insurance to Missourians who could not obtain health insurance in the regular market. In 2013, the pool ceased issuing new policies. Any remaining credits from prior assessments will continue, and the credits can be carried forward until used, so there's about $9 million that are still left that are not used. The last one is on page 9, and it is the Property and Casualty Insurance Guarantee Association tax credit. States created guarantee associations to protect policyholders in the event of an insolvency of an insurer operating in the state. All insurers issuing property and casualty insurance in Missouri are members of the Property and Casualty Insurance Guarantee Association. The association assesses members to pay claims of insolvent insurers, and the insurance companies are then allowed to take these assessments as a credit against the premium tax. Credits are taken over 3 years, with 33 1/3% being taken each year beginning the year after the assessment, and there's no carry forward on those tax credits. Any questions?
I don't think so.
Okay, thank you.
How about health and senior services?
Good morning. My name is Alicia Jones, and I am the Chief of the Office of Rural Health and Primary Care. I'm here to discuss the Medical Preceptor Tax Credit Program housed within our office. This is a tax credit to community-based faculty preceptors who serve as a preceptor for medical student core preceptorship or physician assistant student core preceptorship. The statute allows no more than 200 preceptor tax credits within a calendar year or tax year, which are awarded on first come, first served basis. By statute, the credit is an amount equal to $1,000 for each preceptorship, which is 120 hours, up to a maximum of $3,000 a year. Questions?
Good morning. I am Shira Doherty. I'm the fiscal liaison for the Missouri Department of Health and Senior Services Division of Senior and Disability Services, reporting on the Shared Care Tax Credit. The Shared Care Tax Credit is a program in which eligible families who provide care to an elderly family member in their home may request a tax credit. Caregivers who meet the requirements within the program are eligible for a Shared Care Tax Credit in an amount not to exceed $500 to defray the cost of caring for an elderly person. Thank you.
Natural resources, and next on my list.
Good morning. I am Nora Maxwell, and I am the State Energy Office Program Manager at the Department of Natural Resources, and I'm going to be talking about the Wood Energy Tax Credit. The Wood Energy Tax Credit is discretionary and may be carried forward not to exceed 4 subsequent taxable years. It is not allowed as a carryback, it is not refundable, and there is no federal tax incentive for this tax credit. Statutory authority for the authorization of credits was reinstated and extended to June 30, 2028 by House Bill 3 from the first extraordinary session 2022. There is an annual cap of $6 million subject to appropriations. For fiscal year 25, the appropriation for the tax credit was $3 million. The credit allows $5 per ton for wood products from processed wood residue. A credit of $20 per ton for wood used in charcoal production is allowed. That's all. Any questions?
Senator Bean, do you have any questions on this one? Okay. Thank you.
Thank you for your time.
Of course. That's what we're here for. Revenue.
All right, good morning, Chairman, members of the committee, Joshua Shoemaker, Deputy Legislative Director for Department of Revenue, and I will be going over the tax credits we administer. Starting with the adoption tax credit. This is a tax credit to assist non-occurring adoption expenses of a child as a resident of the state or ward of the state. No cap on this credit. That started July 1st, 2024. Credit will be refundable as of January 1st, 2024, and no sunset or stop date on the credit. Bank franchise tax credit. This is a credit on franchise tax paid. This was actually phased or eliminated on January 1st, 2020. Taxpayers could file amended returns in which the credits were previously approved, and so there was no credits in fiscal year 2024 on this one. Bank tax credit for S corporation shareholders. This is a credit available to shareholders that are banks, bank holding companies, savings and loans, and credit institutions. No cap on the credit, a 5-year carry forward, and no sunset or stop date on the credit. Biodiesel producer and distributor tax credit. This is a tax credit for producers who produce E85 gas. The credit is 2 cents per gallon sold. Has a $5.5 million cap, which is refundable. The credit cannot be signed, transferred, or sold. And it does have a sunset date of December 31st, 2028. Next one, biodiesel retailer and distributor tax credit. This one is a tax credit for retailers who sell biodiesel fuel. The credit is 5 cents per gallon sold, has a $16 million cap. The credit is apportioned and is refundable and has a sunset date of December 31st, 2028. Next one, a Champion for Children's tax credit. This is a credit for 50% of donations made to an eligible organization as determined by Department of Social Services.
Mr. Chairman.
Josh, can you give me just 1 second?
Oh, I'm sorry,
Mr.
yes.
Vice Chair.
Thank you. Josh, we're going to stop on this Champion for Children. As we
Yes.
discuss, I'm going to have 2 or 3 things, and none of this has to do necessarily with you, but it has to do with help educating me.
Okay.
As we look at getting rid of income tax in our state going forward someday, that will eliminate how many of these in this packet, would you guess?
Probably,
Good chunk of it.
pretty, yeah,
Probably all of them.
probably all of them, yeah. Most of them, yeah.
Except for corporate. Okay. So with that, the next question is, you're probably around this, or somebody sitting there is going to be in a microphone later. In states that have eliminated income tax, my guess is we don't eliminate tax credits in some form for people. This Champion for Children's one that we use at home. I gave up on it because it messed up my taxes too many times, but I used to use it. What is the next generation of tax credit that will be put in front of legislators to try to help people to do investment in these things? What will that look like?
That's a great question, and definitely can talk to my people and do some research and get back to the committee if that's okay.
But there's probably stuff out there already that people are doing. Is that accurate or not? To try to motivate somebody like me to donate money to something else?
No takers?
Okay. So if we don't have something else, you may come up later. And are you going to be speaking later or not?
I am not, but I can definitely come back up and answer that question later.
Come on.
Come up to the microphone,
Come on.
please.
Make a big show.
Because as we do look at this, and I'm certainly not opposed to not having to pay income tax, but the motivation that these were put in front of us to help our state, my guess is there's already something out there that are going to be in front of us. Okay, now we're going to give tax credits here.
So depending on how,
Is your microphone on? Get it
yes,
close.
depending on how the income tax is eliminated and language associated, if a taxpayer has a credit and it's refundable, there may be, we'll have to discuss with our legal, our GCO, but there may be some avenues for taxpayers to still claim refundable tax credits.
So even if we're not paying taxes, then we're just going to give people cash back for the tax credits?
It's one of those.
See, and I didn't think I loved the idea of totally getting rid of the income tax, but now if you're just going to pay me on some other random stuff, I don't know how the math is going to work, but I'm excited about this.
I think it would depend on how the language was written on all of the various items. So it's something that we have to take into consideration whenever reviewing changes. But if you're looking for something for someone to donate to and then get something back for that, I would assume that you could change it to a grant, for instance, instead of a tax credit program.
Explain to me what you mean for that, because the word grant almost sounds worse than tax credit.
So if there is no tax to receive a credit against, and it just depends on what the goal is.
So I would give $100 to somebody, and I would pass legislation so that I could grant where the state would give me back $50 of my 100. Is that what you're saying?
That would be a potential if it was chosen. There could also be credits against withholding tax. There are currently tax credits against withholding tax, for instance, for retention and creating jobs. And can we do tax credits against sales tax?
So that,
I don't believe there are any.
I don't believe we currently have any at this time. I don't believe we currently have any tax credits against sales tax, so it could be an avenue to be reviewed.
So I think the answer would just be, it depends on what the legislation looks like that eliminate the income tax and any changes.
I thought
made.
maybe there were models that somebody sitting in this room or somebody listening already see this going on in states have eliminated income tax.
We can certainly look into that and get back to the committee.
Okay, thank you. Thank you, Mr. Chairman.
You bet. So, you good? Okay. All right.
Moving on. All right. Thank you.
Please.
So continuing on the Champion for Children's tax credit, it is a credit for 50% of donations made to eligible organizations. I mentioned that. Cap is $1.5 million annually. It is an apportion credit, and sunset was recently extended to December 31st, 2025. The next one is disabled access for homeowners tax credit. This is a credit for persons who incurred costs for qualifying renovations to make their home accessible for a person with a disability. There is a cap of $100,000 per year. Sunset date was recently extended to December 31st, 2025, or was extended to December 31st, 2025, and a limit of $2,500 per taxpayer per year. The next one is disabled access for small business tax credit. This is a tax credit provided to businesses and corporations that make their businesses more accessible to people with disabilities. Credit limit is $5,000 per business with no more than 50% of expenses eligible, and there's no sunset or stop date on this one. Next one is ethanol retailer tax credit. This is a tax credit for retailers who sell E85 gas. The credit is 5 cents per gallon sold, has a $5 million cap, and the credit will sunset December 31st, 2028. Next one, food pantry tax credit. This is a tax credit for taxpayers who make cash or food donations to a food pantry, soup kitchen, or homeless shelter. This is an apportion credit. Has a cap of $1,750,000 and sunset date of December 31st, 2026. Next one is long-term care deduction. This is a tax deduction for non-reimbursed amounts paid by the taxpayer for qualified long-term care insurance premiums. They're not included in taxpayer itemized deductions. No cap on this, nor a sunset date. Next one is Peace Officer Surviving Spouse Tax Credit. This is a tax credit for surviving spouses of public safety officers whose death occurred during the line of duty. It's equal to the amount of property taxes paid. No cap on this program, and the sunset was extended to December 31st, 2027. Next one, SALT Parity Act. This is a program that allows taxpayers to file taxes at the entity level rather than the partnership level. The partners then report their income, including what the entity paid in taxes, and they get a credit equal to their part paid by the entity. There's no cap on this, and credit cannot be assigned, transferred, or sold, but is refundable. Next one, self-employed health insurance tax credit. This is a tax credit for self-employed taxpayers in an amount equal to the portion of the taxpayer's federal tax liability due to the taxpayer's inclusion of the federal income tax health insurance payment in their federal adjusted gross income. No cap on this program, and it will sunset December 31st, 2028. Next one is a senior citizen property tax credit. This is a tax credit for homeowners and renters for the property tax they pay. I'm sorry. senior citizen tax, property tax credit for homeowners and renters for the property tax they pay. To be eligible, you must live in Missouri the whole year, be over 65 years old, or a veteran who became 100% disabled as a result of such service, or 100% disabled, or be 60-plus years old and receiving surviving spouse Social Security benefits. There is currently a maximum income of $30,000 for single and $34,000 for married, and that phases out as income rises. The cap for the homeowners is $1,100, and for renters it is $750. And no sunset or stop date on this one. Last one, working family earned income tax credit. This is a credit as a portion of the federal EITC credit claimed. This credit can be claimed by taxpayers with filing status of single, head of household, widowed, or married filing jointly who is allowed a federal earned income tax credit. It is not refundable or transferable. It does not have a cap, nor does it have a sunset or stop date. And that is all for us.
Thanks, Josh. Any questions from the committee for revenue?
All right.
Good work. Thanks.
No problem. And we'll get back to you, Senator Black, on that question. Okay.
Thank you.
No problem.
Social services is next on my chicken scratch list here.
Good morning, committee. My name is Austin Chambers. I'm here with the Department of Social Services to present the 7 tax credits that we administer. The first one, I believe it's on 137, but I could be wrong. I'll double check with you all. But we'll go ahead and get into it. The first one I have here is Developmental Disability Care Provider Tax Credit. To provide a tax credit, page 57, sorry. To provide a tax credit for qualifying taxpayers who make eligible contributions to qualifying developmental disability care providers. The tax credit does not have a cap, and it can be carried forward for 4 years. The next one I have is the Diaper Bank Tax Credit. The purpose of this one is to help fund diaper banks and assist infants, children, or incontinent adults with disposable diapers or other hygiene products. The tax credit equals 50% of the donation made to the diaper bank. The tax credit may not exceed $500,000. The sunset for this one was on December 31st of last year, and the tax credit can be carried forward for 1 year. The third one I have here is the Health, Hunger, and Hygiene Tax Credit. This one was designed to help provide funds for the unmet health, hunger, and hygiene needs of children in school. Qualified providers must meet all 3 needs, health, hunger, and hygiene needs of the children in school. There is no program cap. This one did sunset last year on August 28th. The fourth one here is the Maternity Home Tax Credit. The purpose is to provide tax credit for qualifying taxpayers who make eligible donations to qualifying maternity homes. There is no cap on this tax credit, and there is 1 year carry forward. The fifth one here is the Pregnancy Resource Tax Credit. It is to provide a tax credit for qualifying taxpayers who make eligible contributions for qualifying pregnancy resource centers. There is no cap on this credit, and there's also a 1 year carry forward. Yep. The sixth one, Residential Treatment Agency Tax Credit Act. The purpose is to provide a tax credit for qualifying taxpayers who make donations to eligible residential treatment agencies. Donations are to be used solely to provide direct care services to children who are residents of this state. Direct care services include, but are not limited to, increasing quality of care and services for children through improved employee compensation and training. There is a 4 year carry forward on this one. Final tax credit here is the Domestic Violence Shelter or Rape Crisis Center Tax Credit. This one is to provide tax credit for qualifying taxpayers who make eligible contributions to qualifying domestic violence shelters or rape crisis centers. There is a 1 year carry forward, and that concludes TSS.
Any questions from the committee? Does not appear so. Thanks. Next up, State Treasurer.
Okay, I'm Jocelyn Oligschlager. I'm the Director of Banking for the Missouri State Treasurer's Office. We just have the Missouri Empowerment Scholarship Account Program tax credit. This tax credit is intended to provide educational opportunities for children with IEPs or low-income households to help these students receive education to help with their special needs and formulated for more towards them. The credits are awarded on a first-come, first-served basis. There is an annual cap of $75 million. And it's on a calendar year basis.
Thank you. Any questions from the Treasurer's office, for the Treasurer's office? No? Doesn't appear so. Thanks for being here. Now the Blue Book. DD.
Good morning. I am Brooklyn Wasser. I am the Division Director of Business Opportunities with the Department of Economic Development, and I will be facilitating DED's presentation of the tax credits that we administer, and I will hand it over.
Thank you. I'm Jennifer Schmidt. I'm the Deputy Executive Director for the Missouri Housing Development Commission, and I have the first 2 tax credits. If you look on page 4, we have the Affordable Housing Assistance Program. This is a donation credit for an eligible donor to donate to a nonprofit for the purpose of providing affordable housing activities. This is statutorily capped at $11 million, and it has a carry forward of 10 years with no sunset. On page 8 is the low-income housing tax credit. This is a 10-year credit available for the production of affordable rental housing. This credit generates equity investments from the private sector for the rehabilitation or new construction of affordable rental housing. This is also statutorily capped. It has a carry forward of 5 years, carry back of 3 years, and no sunset. And that concludes my 2 credits. Okay, thank you very much.
Next, we will bring up Mark with Development Finance Board.
Thanks, Brooklyn. Mr. Chairman, Senators, pleasure to be with you. Going to walk through 3 tax credit programs that the board administers. First, on page 11 is the Bond Guarantee Program. It provides guarantees for major public infrastructure projects. The total amount of the credits would be tied to any outstanding principal on bonds or notes that should not exceed $50 million in any particular year. Excuse me. The credits are redeemed in the amount of a default in any particular year and only in the amount of that shortfall on an annual basis. The credits can be carried forward for up to 10 years from issuance. They are also sellable and transferable. The tax credits are essentially designed for projects that have revenue streams to pay the debt. This is just a guarantee that helps that upfront financing package get put together. Moving on to page 14, the BUILD program, our large-scale development tool. The nature of the investment and job creation thresholds here have this utilized as a financial incentive for the location of new facilities or significant expansion projects in the state. The program has a $25 million cap annually. And again, that cap is tied to the aggregate amount of debt service on the aggregate number of bonds that are outstanding. So the tax credits flow over the life of the bond for a 15-year period. These credits are refundable. I'd move on now to page 18. The infrastructure tax credit, this is another contribution-based tax credit. So a discretionary program we administer that we assist in funding for capital improvements for qualified public infrastructure facilities or infrastructure projects themselves. Program has a $10 million annual calendar year cap. The credits are issued and 50% of the contribution that's made towards the project, those contributions come to the finance board, and then those are granted out to the project for the eligible aspects of the project that we partnered on. The credits can be carried forward for 5 years and are sellable and transferable. I'd be happy to answer any questions.
Okay, we'll move to Missouri One Start with Chrissy Davis.
Okay, good morning, Chair and members of the committee. I will be presenting 2 tax credit programs for the Missouri One Start Division. The first one is on page 24, the Missouri One Start Community College Training Program. This is not a typical tax credit program, rather an appropriation based on employer withholding. This program combines 2 funds, 2 training program funds, the New Jobs Training Program and the Job Retention Training Program. Both these programs are suited for either a large attraction projects that are creating a substantial number of new jobs or large expansion projects that are upskilling existing workers due to large capital investments such as equipment. This program is administered locally through the community college, and funds are generated by deferring a portion of the state employer withholding tax, approximately 2% of those withholdings, on creating or retaining the jobs in the project. Next, I'd like to turn to page 30. This program is an intern and apprentice recruitment tax credit. This was created in fiscal year 23, and the program began in January of 2024. This tax credit program authorizes income tax credit equal to $1,500 for each intern or apprentice hired at a pay rate equal to or greater than the minimum wage, provided that the number of interns and apprentices employed during that tax year exceeds the average number of interns and apprentices employed by the applicant the previous 3 years. This program has an annual cap of $1 million, and the tax credits cannot be carried forward, they cannot be sellable, and they're not assignable. And that's it.
Thanks. Go ahead.
Okay, I'm going to be going over the redevelopment and business finance programs. Starting on page 33 is Advanced Industrial Manufacturing Zones Act, or AIM zones. This program diverts withholding taxes from new job creation in established AIM zones to the Port Authority. The benefits are 50% of the state withholdings tax from the new job creation by Missouri businesses subject to state tax withholdings and located in the AIM zone. There is no program cap. The date of sunset is August 28, 2030. It does not have carry forward, carry back. It cannot be sold or assigned. It is not refundable. On page 37 is the Amateur Sporting Contribution Tax Credit Program. This program provides an incentive for donations to certified sponsors and local organizing committees with a support contract for a sporting event. This program provides a tax credit to taxpayers making eligible donations to certified sponsors and local organizing committees, and the taxpayers can receive tax credits equal to 50% of an eligible donation to an eligible applicant. The annual cap is $10 million. There is a sunset date of August 28, 2025. There's a 2-year carry forward, no carry back. It can be sold or assigned. It is not refundable. On page 41 is the Amateur Sporting Ticket Sales Tax Credit. This program provides a tax credit that is designed to encourage the location of competitively bid amateur sporting events in Missouri. Eligible applications can be awarded up to the lesser of $5 per event ticket or 100% of eligible costs. The annual cap is $3 million. The date of sunset is August 20th, 2025. There's no carry forward, no carry back. It can be sold or assigned, and it is refundable. On page 50 is the Historic Preservation Tax Credit. This program provides an incentive designed to encourage the redevelopment of commercial and residential historic structures in Missouri. Tax credits are 25 or 35% of the qualified expenditures. The program cap is $134.4 million. There is 10-year carry forward, 3-year carry back. It can be sold or assigned, and it is not refundable. On page 54 is a neighborhood preservation tax credit, provides an incentive for any taxpayer who incurs eligible costs for a new residence or rehabilitates a residence for owner occupancy that is located in a designated area. The tax credit is 25 to 35% of eligible renovation costs or 15% of new construction. There is an annual cap of $16 million, $8 million for qualifying areas and $8 million for eligible areas. There's no sunset date. It can be carried forward 5 years, carried back 3 years. It can be sold or assigned. It is not refundable. On page 58 is the business facility headquarters tax credit. It's a tax incentive to facilitate the expansion of new or existing businesses in Missouri. The Missouri company qualifying as a new headquarters facility may receive the greater of $400 for each new business facility employee and 4% of new business facility investment, or $500 for each new business facility employee and $500 of each $100,000 of new business facility investment. There is no program cap. It is has a sunset date of December 31st, 2028. Carry forward of 5 years, no carry back. It can be sold or assigned, and it is refundable. The Enhanced Enterprise Zone Tax Credit Program was replaced by Missouri Works, so we will move forward to page 67, which is the Entertainment Industry Jobs Act, which provides a tax credit for rehearsal and tour expenses that meet the minimum rehearsal and tour requirements, a tax credit for 30% of rehearsal and tour expenses that meet the minimum rehearsal and tour requirements. There is an $8 million annual cap. The date of sunset is December 31st, 2030. Carry forward 5 years, no carry back, can be sold or assigned, and it is not refundable.
I'm sorry, Ms. Wasser. We have a question from a freshman member, Senator Fitzwater.
I'm not a freshman anymore, first of all.
He's a sophomore.
Have you been
Point of
reelected
order.
yet or not? No? Still in your first term, freshman.
Oh my gosh, I'm so sorry you have to deal with that. Yeah, I do have a question for you. Can we go back to the historic preservation tax credits really quick, because these numbers always stand out to me. Just looking at page 51, the fiscal period, fiscal 2024 activity, you have the benefits cost, benefit to cost, and then the other fiscal period is 10 years fiscal benefit to cost, which is 0.24% or 24%, I guess. I don't. All I know is that the benefits are to us are low compared to the costs, and as you look at from a department level these and you're seeing the benefit numbers look like this, like do you all think this is the smartest way to use the funds? I mean, I could be wrong. I'm asking because I just would love information, because these numbers are so huge, and it feels like we're always promised the direct benefit or the indirect benefit is going to be 5 to 1, 8 to 1. You know, you put $1 in, we'll get 8 back. This doesn't really confirm that narrative.
This program is more like residential homes or commercial businesses. They don't create jobs, which is a lot of where the benefit ratio comes in for that. So the REMI model that we use looks at job numbers and investment. So just for historic tax credit programs, we look at the benefit to the state as it were, preserving the historic nature of these homes and structures. And that's kind of how we look at the benefit for this program specifically,
Okay,
which
and
is a little bit different.
And
than
there's a
our
number
others.
of just some large investment tax credits that have like a significant amount of our budget, LIHTC, the historic preservation. So there's just a couple. It's like it's always been a concern for me since I've been in the legislature. So thanks.
Okay, on page 67, the Entertainment Industry Jobs Act is a tax credit for 30% of rehearsal and tour expenses that meet the minimum rehearsal and tour requirements. $8 million cap. Date of sunset is December 31st, 2030. 5-year carry forward, no carry back. Can be sold or assigned, and it is not refundable. On page 70 is the motion.
Second, sorry. Senator Washington.
Hi, thank you. On page 66, it says that we don't have any qualified rehearsal facilities. What would qualify? Well, is this just for concerts, or would this be like theater as well?
Do you want to speak to it?
I'm Andrea Sporsek-Klund. I run the Missouri Film Office, and I also oversee the entertainment tax.
Can you
credit
speak
program.
into the mic and turn it
Sorry.
on?
Is it on? Yes. Hello. Hello.
Thank you.
Okay.
I'm older than him. I'm more mature and seasoned.
So the building in Chesterfield, Gateway Studios, would qualify, but it's not yet open. We're expecting that to be open in May. They've had several delays. So we've had no applications yet for this program.
Okay, so my question is it only for concerts or is it for any type of entertainment?
It is written for concert touring specifically.
Okay.
But their facility may be able to do other things.
No, the reason I asked is because I'm just thinking about like theater, like a play would qualify for this. And so that's why I asked who actually qualifies. So, because plays are going to be
Right.
here for a long, they're going to have the 10 days or whatever.
Sure.
Okay, thank you.
Okay.
Continuing through the motion media, the tax credit is equal to 20 to 40% of qualifying expenses. There's a $16 million annual cap, $8 million for film production and $8 million for series production. It is due to sunset December 31st, 2029. 5-year carry forward, no carry back. It can be sold or assigned, and it is not refundable. On page 74 is the Missouri Works program. This is to qualify, a company must create or retain a minimum number of new jobs at the project facility, meet average wage requirements, and must offer and pay at least 50% of the health insurance premiums. Benefits include a retention of the state withholding tax of the new jobs or state tax credits and are based on the payroll of new jobs. There are certain thresholds that must be met in order to receive benefits. There is an annual cap of $126 million for tax credits and $75 million for withholdings. It has a sunset date of August 28th, 2030. No carry back, no carry forward, no carry back. It can be sold or assigned, and it is refundable. The Missouri Quality Jobs Program was replaced by the Missouri Works Program, so we will skip forward to page 82, which is the Qualified Research Expense Tax Credit Program. Any individual, partnership, corporation, or charitable organization conducting qualified research in the state is eligible. Applicants may receive the greater of a 15% of the taxpayer's additional qualified research expense or 20% of the additional qualified research expenses if the qualified research was conducted in conjunction with a Missouri public or private college or university. Has a annual cap of $10 million, a sunset date of December 31st, 2028. It has a carry forward of 12 years. I apologize for the choose number there. It didn't go up that high. Carry back, no, and it can be sold or assigned, and it is not refundable. On page 85 is the Rural Access to Capital. This program is workforce development and capital investment in Missouri's rural areas by providing incentives to invest in those areas. It has a annual tax credit cap of $16 million per calendar year for 4 years. It has a 5-year carry forward, no carry back. It cannot be sold or assigned, and it is not refundable. And then the wine producers and grape growers. This is any grape grower or wine producer within the state can claim a tax credit for a percentage of the purchase price of all new equipment and materials used directly in growing grapes or producing wine within the state. The tax credit is equal to 25% of the purchase price of all new equipment and materials used directly in growing grapes or producing wine. It does not have a program cap. It does not have a sunset date. It does not have carry forward, carry back. It cannot be sold or assigned, and it is not refundable. And next, we will move to the community development programs with Daniel Epler.
Hello, good morning. I'm doing fine. How about yourself? Good deal. All right, so we're going to be kicking off on page 91 with the Capital Complex Tax Credit Act. This is a contribution tax credit program that provides a credit for monetary or artifact donations to Capitol Complex buildings, including the State Capitol, Supreme Court, Old Federal Courthouse, Highway Building, and Governor's Mansion. Monetary donations are eligible for a 50% refundable tax credit. Artifact donations are eligible for a 30% non-refundable tax credit. No more than $10 million can be authorized within a calendar year. The credits have a 4-year carry-forward period, and they are sellable. Next, page 94, the Family Development Account. This promotes self-sufficiency through asset development for low-income persons through a match savings program. $300,000 in tax credits can be awarded each fiscal year on an open cycle, and those earn 50% credits. They do not have a carry-forward period, and they are not sellable or refundable. Next, page 99 is the Neighborhood Assistance Program. This provides assistance to community-based organizations that enable them to implement community or neighborhood projects in the areas of community service, education, crime prevention, job training, and physical revitalization. The program has a $16 million cap in both 50% and 70% tax credits. They have a 5-year carry-forward period. They are not sellable or refundable. Next, page 104 is the Small Business Incubator Tax Credit Program. The purpose of which is to generate private funds to be used to establish a protective business environment in which a number of small businesses can collectively operate, fostering growth and development during a business's startup period. The program has a $500,000 50% credit cap and is allocated each calendar year to approved incubators. The credits have a 5-year carry-forward period, and they are not refundable, but they are sellable. And next on page 107 is the Youth Opportunities Program. This is a contribution tax credit program which broadens and strengthens opportunities for positive development and participation in community life for youth and discourages criminal and violent behavior. The cap is $6 million in 50% credits and operates on a calendar year. The credits have a 5-year carry-forward period, and they are not sellable or refundable. Thank you very much.
Thank you.
Thank you.
The rest of the book includes programs that have been sunset, eliminated by statute, or the overall program cap is exhausted. So that concludes our presentation. Thank you.
Thank you, Ms. Foster. Any other questions on any tax credits while we still have a handful of people here? Probably not. No? Dan, you want to do rolling stock real quick? Somehow we skipped that. Probably because Adam didn't write it on our sheet. The wheels are falling off the train, Dan. What do you got? We got to put them back on?
That's
Need
all
a
right.
tax
We had the
credit to get
rolling
it
stock
done?
tax credit, which
Puts 'em back on?
reimburses absolutely eligible expenses for private rail car companies for repairs made in Missouri. That's our only tax credit.
Fantastic. Appreciate it. Any questions for Dan before we cut him loose? Dan, thanks.
Thank you.
That'll conclude the tax credit hearing, which I'm not really sure that statutorily we're required to do, but I think it's a sick joke that Adam plays on us every year as sort of a punishment and drags all you guys in here at the same time. So thanks for being here. Tomorrow we're going to do $4 billion worth of DESI. So see you in the morning.